we will kick things off. So thank you for joining this session on the UK property market, the outlook of 2025 and looking back to 2024 in terms of lessons, opportunities and trends. Bit of housekeeping for you. I can see you guys are already filling up the chat, so thank you so much for that. But please do submit any questions you've got for myself or Andy during the chat, during the webinar, and we'd love to hear from you. We'll try and get around to those questions as soon as possible. If not, we'll do a live Q&A session towards the end. But if you've been on one of these webinars before, you know it's your engagement that really makes these sessions worthwhile. So I look forward to seeing all your questions. And if you haven't introduced yourself, please do. We'd love to know what you do and where you're dialing in from. So for those of you guys that don't know me, my name's Chris. I am the co-founder of UK Homes Network. I've been in property for roughly about 14 years. Started off as the guy that made the tea for the guy that made the coffee, and then eventually worked my way up to running branches and supporting developers and investors on acquisition strategies. I've also retrained at the end of my estate agency career in digital marketing, and I've worked for a house builder and property finance company, which led me on to UK Homes Network, which is the first social media platform exclusively for the property industry. So it's a way you guys can network, talk about what's happening in your daily lives when you're out on site, share projects, talk about the struggles of everyday life in the property industry, where you can find a growing network of hundreds of property professionals that are there to support you and sharing your experiences. It's a great place to ask for recommendations, promote yourself and your business, and there's lots of features in there, lots of events, lots of great stuff. So if you want to scan the QR code, you can sign up for free. It takes a couple of seconds to create a profile, and then you guys can start firing into the network and sharing what it is that you do. So thank you so much for everyone that's joined this session. As you may know, we're joined by Andy Butts, the new Homes and Investment Director for Centrick. Centrick have been one of our partners for the last 6 months. They've been an incredible support to us. Obviously, we're a new business, and working with the team at Centrick has given us not only the validation that we needed within the market, but also opened doors for us to find new networking opportunities and invite new members into the network. So without further ado, Andy, how are you?
I'm very well, thank you, Chris. Yeah, thanks for inviting us on. I know we've been trying to get this done for a while, so nice to finally get the last slot of the year in.
Well, you're a busy man with lots of projects all around the country.
Yeah, trying to keep busy. Yeah, I'm just off to, as I mentioned earlier, after Nottingham after this to hopefully look at a new project. So yeah, more to come on that soon, hopefully.
Great stuff. So Andy, from before, probably a year ago, I'd come across Centrick, and I think I had a sort of common misconception that Centrick was an estate agency, but you guys are so much bigger, so much more going on in terms of what you guys do and the services that you offer, and of course the kind of clients that you provide for across the industry. Could you just give us sort of a run through of what Centrick is, how you support the property industry? And I know you guys are doing a lot on the training side with your academy, so it'd be great to find out a little bit more about that.
Yeah, brilliant. Thanks, Chris. Yeah, we're next year we'll be 20 years old, so look out for the invite for our 20th anniversary party. I'm sure that'll be a good one. So yeah, we do a few different things within the property market or the real estate market. So historically, we were known very much for our estate agency business, our lettings business. I think that is a very customer-facing business, and a lot of people get to see the brand. So I think that's why people probably clocked on that we were a lettings and management business. So we built a portfolio of around 3,000 rental units that we manage for individual clients. We recently exited half of that business, so we no longer do the typical high street estate agency. But we kept hold of what I predominantly look after, which is land, new homes, and Centric Invest, which I'm sure we can talk a little bit about later. One of the big parts of our business is also building and estate management. So we are probably managing buildings from Southampton up to Leeds. I think there's about 30,000 units in that now, in that portfolio. And that covers all the things, if people don't know what that means, basically is what you pay your service charge for. So caretaker services, concierge services, buildings insurance, window cleaning, grass cutting, anything that is kind of maintenance of the fabric of the building. We've then, I suppose, took the skill sets from that building and estate management and also our lettings business that we had before and come together to create an asset management business. And what a lot of that is doing now is working in the BTR, which is build to rent sector. So a lot of funds, a lot of pension funds, etc., are buying buildings or building developments for long-term holds. So they might be building anything from 100 to, I think there's a development going up in town at the moment, which is 780 units. And they will just sit on those and hold them as a rental portfolio. So we can do the consultancy on that. We can mobilize the site, get it all rented, managed, as well as doing the building management. So there's some other businesses then that plug into those that I've just mentioned in terms of like a maintenance business, etc. But I suppose, yes, that's us in a nutshell. We do most things that are property, along with a valuations business, which obviously does valuations for mortgage lenders and probate reasons and stuff like that.
Right. And you guys have got sort of a bit of an ethos or a mantra, which is you're trying to raise the standards across the industry. Me and you have obviously had a bit of fun, but in terms of taking the picture in front of your power is knowledge sign in the office, which is huge. And that's something that you guys are really passionate about, because we know that, you know, particularly in the estate agency, but in the wider industry, there is no accreditation, there is no sort of licensing, as it were, to be managing properties or licensing properties. But you guys are taking it upon yourselves to try and raise those standards and actually set the bar for what should be expected.
Yeah, I think, you know, I've been in the industry for just over 20 years now. I think it's 21, 22 years. And within that time, particularly in the agency side, I've seen the quality of the agents operating drop quite drastically. I think people get into the industry thinking it's, I don't know, easy, whether it's glamorous, that kind of stuff. You know, they watch Selling Sunsets and get into the industry and realize it's quite, you know, there's a lot of work behind the scenes that gets you to that appointment or gets you to that £1 million listing. And yeah, the quality, I think most people will have a bad experience if they've viewed a property, dealt with an estate agent. And I really hate that stigma of what estate agents are. You know, I joke with a lot of my clients and I say, look, I'm not an estate agent, I'm a property professional. And a few of them actually turn around to me like a year after starting dealing with me and say, I understand what you mean now. So I think we are very much trying to push back into our own service levels and staff and take them on a journey. So you've mentioned it, but we created the Centrick Academy, which is a huge space on our ground floor in Birmingham, can probably sit about 80 people. And we're putting people on our own training courses. We've employed a fabulous new learning and development director in-house. And everything we do in the property sector is service driven. You know, we don't build anything, we don't create anything, we don't manufacture, it's service. And I think to find good service in our industry, and actually many other industries now, is probably the biggest failing within the industry. So, you know, we're teaching everyone the raw skills and talent that you need, but also then that customer service and due diligence and right the way through to things like health and safety. So, you know, to have a trained workforce is probably one of the biggest keys to having a successful workforce. So we've invested a huge amount of cash into that space and that tech, and also the resource, as in a learning and development director, to really, you know, hopefully if somebody touches or deals with a Centrick member of staff, they'll feel the difference, and they'll feel like that it was a good contact point, and not a negative one. I think if we can leave every conversation on a positive, that's our ambition.
Great stuff. Yeah, I think standards will naturally go up anyway because I've left estate agency now. But yeah, as I was saying, you hit the nail on the head. I wrote an article for the Negotiator this week, and in the article I was explaining that the first week I ever had in a estate agency, I was 2 days into my first week, and my branch manager chucked the keys at me and told me he was going on paternity leave because his wife had gone into labour. So I was left in the branch with 2 days experience under my belt, and it was a case of fake it till you make it. So it's really nice that there is people like Centric doing stuff to proactively raise those standards and ensure that we're doing the right thing and raising their reputation. So yeah, fantastic stuff. Andy, in terms of 2024, is it a year you're going to look back fondly, or is it one of those sort of pull your hair moments? How do you sort of, yeah, how do you feel about
Had hair in 2023, yeah.
yeah,
No, I think a mixture really, Chris. I think there's been a lot of reasons for people not to transact in 2024. Political, obviously the election, the budget, mortgage rates increasing, a little hangover from kind of 2023 and before that of Liz Truss, etc. So I think this year has been a year where people have sat on their hands when they don't need to move or don't need to build. So from a developer's perspective, we've seen developers, keeping their powder dry is the favourite phrase this year. Again, wanting to get the election, the budget, wanting to see developer finance start to calm a little bit, making sure that the market continues to move, because if they're going to build them, they want to know there's an exit in mind. So I think it's been a year of stagnation almost, and nothing too crazy has happened. Like prices haven't dropped by 20% or whatever. It's been a year of just churning through. And I think most people are coming back to me in this last quarter saying we're ready to trade now. We're ready to operate, whether that's somebody looking to sell their land, whether it's someone looking to acquire and give me some criteria to go and look for them. And also we've seen good demand from purchasers after the budget as well. So I think, if anything, it'll be nice to see the back of 2024 for sure, and look forward to what is hopefully a positive 2025.
great. And obviously with sort of consumer confidence dropping, has that been the main challenge for you this year, and trying to sort of reassure customers that you're there and ready to support them?
I think the biggest challenge for us as a land and new homes department has been the lack of transactions happening at the start of that funnel, so land transactions. So we've got landowners either not selling because of the market or still expecting price levels that maybe they were getting told they were worth a couple of years ago. We then got developers that would usually have that appetite to go and buy something obviously cooling and saying, look, that's now not worth it, or I need to put some risk measures in place, so I'm not prepared to part with £2 million for that I offered last year. It's now 1.6. So I think it's that the biggest challenge has been getting sites that stack and that are viable for developers, which then trickles through to having the available stock for the consumer, the end user. I actually think if the product was priced correctly for the end consumer, it's been moving. We've had some very successful sites this year, but I do think demand can still increase next year. Now that I think we've hit the peak of the mortgage rates. It feels like they're coming down. I think I said this at the start. It needs to become normalised, because we've had rates at 0.25% as a base rate for far too long. And most people have, probably just under the generation of us, is accustomed to borrowing at 1.5, 2%. It's not going to go back to that. 3.5%, 4% is going to be your average. So we've almost got to create that normalisation that is the trading market now. But I think because rates stuck so low for 20 years and then just went sort of within 12 months, it's caught everybody off guard, and that much change that quick hurts. Whereas if it would have been 0.5% every year, you wouldn't have felt it almost. But it was the speed in which it happened caused a lot of people just to clam up. So I think now that people are like, okay, we want to move, we need to move, whether it's need a bigger house, need to move closer to school, work, I think people are just going to have to bite the bullet at a 4%, a 4.5% rate, and move and be accustomed to that. That is the new norm in terms of the mortgage market. So I think people are becoming more comfortable with those rates over time.
And do you think that there's sort of, is it blanket across the UK, or is there regional hotspots? Because I was blown away by the level of analysis you guys did when it came to your development in Longbridge. The If people aren't aware of it yet, they need to look in UK Homes Network and find the Centric Investor Club, because it's incredible in terms of what you guys are doing and the support you're giving to investors. But you showcase the development in Longbridge, and obviously identifying the scientific industrial estate and also the M&S coming into the area. You were finding and able to make that analysis and give it to investors as this is where there's a regional hotspot. Is that you finding those areas across the UK?
Yeah, absolutely. I think, you've got to look for the right signs and signals when investing, and that's what we do as part of our due diligence and onboarding process. We won't take a development on unless it's got, for want of a better phrase, like a really good story behind it. We want developers and investors to work with us into the future. We're not here for 12 months and a quick smash and grab. We want to build a development and an investor database. So every time we take a development on, it must have, it must be future proofed in terms of tenant demand ultimately for our investors. And what makes tenants tick is what's really important to us. We did a huge piece of research last year. I think we managed to reach about 1,000 tenants in terms of responses, and we can grade what are their top 5 things they look for with property. And we've also been able to regionalise that because we've got tenants all over the UK. So we know what makes tenants tick in Manchester, what makes tenants tick in Birmingham, in the East Midlands, etc. So we've been able to then present that to developers and say, hey, your end users are investors, and their target audience are these tenants. Their tenants are looking for this type of collateral or this type of development, should I say. So can we start building that into some of the consultancy work that we're doing with you? So, whether it's green space, whether it's energy, whether it's parking, whether it's on-site gyms, we've done a huge piece of research, which is out there. If anyone wants it, I can send them the document. But, I think there are regional hotspots, and you have to be very aware of what's going on around the periphery of the site before you start investing, I would say. So yeah, going back to Longbridge, I think St Modwin Homes have been a huge part of that process. They've built hundreds, if not thousands, of homes down there. They've developed obviously the retail park that's there, which is fantastic. If anyone's looking to go to an M&S, I think it's like the biggest M&S in the UK, it feels like. But then there's the business park that's opposite that's being created. There's more housing behind it. There's a huge business park being literally just gone through planning. So you can see gentrification happening. And what I like about that is it's obviously quite famously known as the MG Rover site, which obviously went into administration many years ago and obviously was left derelict. So it's repurpose of land, not utilising green belt or anything like that. It's ex-industrial land that's now been repurposed for leisure, retail, and housing, which I think is a great mix.
Yeah, I did a repossession down in Longbridge about 8 years ago, and it was one of the worst repossessions I've ever been into. But that area is now completely redeveloped, and it's an absolutely stunning location in terms of sort of the local amenities and stuff. So BTR is huge. It's been talked about loads over the last sort of 2 years in terms of, well, longer than that, but in terms of how prominent now it is in the property industry. And I think in terms of your expertise and what you guys lean into and the research you've compiled, is that where the developers are being more successful, is when they're heeding advice from you guys on the research you've done? So they're channeling more the psychology and the buyer persona of the tenant, as opposed to just trying to make things look nice and create a nice development. They're actually satisfying those needs.
Yeah, I think again, going back to one of our favorite slogans, that knowledge is power. I think, developers can go into these projects and develop what they like or what they think is the correct model or the correct layout of these apartments and communal space. Um, and what I and our team definitely try and say is, look, bring us in at the earliest possible stage, because we deal with the end user and the end consumer every day and have done for the last 20 years. So hopefully we can give you some really good insights into what's going to make that development successful. If you're holding it as a BTR, then you're going to want to know what's going to make it stand out from other BTR schemes in the private rental sector. So, what is the tenant demand? What is the blend of 1 beds, 2 beds, 3 beds, studios? What does the communal space need to look like? What does that need to offer? Is it a gym? Is it a coffee bar? Is it, flexible meeting space? All these things are can be quite unique to the location as well. So again, what we say to people is, look, bring us in. We'll run like a consultancy period for you, and ideally that's before you go in for planning. We've seen some horror shows where people have just gone, look, we just want as many units as possible. It's residential from the ground floor to the 15th floor, and it just doesn't work. Any developer that's going to look to buy that off them is going to say, well, the ground floor doesn't work as resi, it needs to be commercial, or have some breakout space, some communal space, etc. Your blend of units is wrong, your sizes of these units is wrong. So yeah, I think leaning on the experts and the agents is something I try and say to developers all the time. But yeah, it's how early in that journey we can catch them, I think, to have an impact on the development.
Great. And over the last year, would you say that sustainability has been sort of a key decision process within investments and construction? Has this been a hot topic for the people that you're dealing with in terms of how
Yeah,
attitudes are changing?
yeah, definitely. I think in terms of how green these buildings are or developments, I'm talking to developers that build in two houses through to developers that build in 150, 200 apartments, and to build green is very important. I think there's a lot of regulation and legislation that's changed over the last 12, 18 months with, for anybody that understands EPCs, energy performance certificates, to get an A now compared to what it took to get an A 18 months ago, it's night and day, literally. We had developments that have been delayed for certain reasons, whether it be planning, whether it be funding, or some of the logistical issues. But they were rated as an A before. If they deliver the same scheme now, they're rated as a D. So you can imagine the cost for the developer to bring it back now from a D to an A. So it's really important to understand that. Again, this is all build cost, so to put solar panels on, or battery storage, and air source heat pumps and underfloor heating, triple glazing in some instances where there's a lot of glazing, building green is becoming a very big part of the industry. Big corporate investors, institutional investors are looking at that as well. They want to be seen to be investing in green product, but also they want to future-proof what they buy. So right the way through to the tenant also, in a lot of cases, in their top three kind of criteria points, a green property is also one of their top three in most locations. So you can see whether you're looking to target it as a tenant or a family sale, a family home. I think energy is one of the top three things to probably consider for developers and investors.
Yeah, definitely. And that comes under sort of nicely to my next question, which is affordability, because those costs are then related to the developer if they're having to put in triple glazing and air source heat pumps, and that affordability then gets passed down to the end user, the buyer, whether it's the tenant or whether it's the person purchasing the property. How have you seen that over the last 12 months? Is that something that developers are becoming more aware of? Is it something that buyers are more prepared to pay for, in terms of if they know
Yeah.
that they're going to save on their heating bills, they might be able to?
Yeah, I would say there's a bit of both. I would say if we start with the developer side of the fence, I've had probably 4 or 5 calls over the last month saying, oh, we are struggling to get to an A unless we spend £30,000 more on each home. How important is it we get to an A, or could we sell these as a B? Because can we get back that £30,000 in value? Then on the flip to that, we have conversations with purchasers that are saying, well, does it have a battery storage unit now is becoming quite a common request, particularly for family homes, 4 or 5 bedroom properties. And just to give you an example, we've got a development just up the road from me here. And to install a Tesla storage battery, it's probably about a £10,000 uplift just for the battery install. And most of the buyers are, if not already committed, about to commit to that, providing they're going to stay there for a long period of time. I think if you're only going to stay there for 4 or 5 years, it probably doesn't make financial sense. But if you intend to stay there for 10 or more years, then it's an investment that's worth doing. So I think people are prepared to pay more for energy efficient homes, and I think developers are understanding that it is a requirement now, almost of the end user. So they're having to, and in some cases, what I'm saying to them, look, it might not achieve more. Let's say a property is 750,000, it might not achieve any more, but it make it more saleable. So then, is that actually a cost saving to you? Because if it doesn't sit on the market for too long, then the finance costs and the holding costs and everything else. So there's a fine balance of where the sweet spot is, but I think on both sides it's very important. And yes, to build them is becoming more expensive, which again is why the homes are becoming more expensive, because developers can't build it and become cost neutral. It needs to make a profit. So you look at some schemes and you just can't build it for what the local market's going to pay for it, which then makes it unviable. But yeah, I think it is one of the reasons why prices are still creeping up, because the tech that's having to go into them, and to make it viable for the developer to build at that level and sell.
Great. And there's sort of a theme with this is the demand supply imbalance that is constantly being rammed down our throats, because the Labour government yesterday announced the new national planning policy framework and the 1.5 million homes that are going to be built. And, there's some stuff in there in terms of planning changes, which have been welcomed by the industry. But I wonder, what's your thoughts in terms of looking forward to next year? Do you feel that it's an ambitious target, or do you feel that can you see us making progress over the next 12 months?
Yeah, I think next year is going to be difficult. And I was having this conversation actually just yesterday with an architect and a developer of mine over a very sensible Christmas beer. But yeah, you've got to get the planners in place first and foremost. I think there's just not enough planners in the system. To give you an example, a site that we are working on at the moment, it's 5 homes. It took them, I think, best part of 2 years to get that through planning. How are you ever going to build 1.5 million homes if it's taken 2 years to get 5 properties through planning? And part of the challenge that we saw on that one was that the planning officer worked for 2 councils and pretty much worked part-time. So the time they arrived on a Tuesday, caught up on emails, maybe replied to your queries, you'd then respond, and by the time you've responded, he's already gone on to the next role in the other council, and then it's another week delay. So there's just not enough planners in the system, and I think there's appetite from developers to build. I think there's appetite from purchasers to buy. But there's a big bottleneck in the middle, which is the planning process. And also, if you're a planning officer, what's the attraction to go and work for a local council in their planning office versus a private planning business?
Yeah.
And it's, how do you attract those people into those roles in the council when I think people haven't enjoyed working for probably the local councils? Councils are going broke quite often at the moment. We've seen many across the UK go broke, Birmingham being one of them. So, are the local councils going to have to think about outsourcing some of that to private companies to help with the load? But there needs to be that commercial vision of how do we get, good quality planners in? How do we get enough in? And if not, what's the solution maybe to outsource that? Because at the minute, it's just that is the bottleneck. And I think we're talking about next year, and we're there already pretty much in a couple of weeks. So is next year, are we going to have enough time to change it next year? It could take a couple of years to actually for all that to work through and the plans to be implemented and the resource to be available. So I think it's still going to be a frustration, but yeah, I see that as probably the biggest challenge is things just taking 1 or 2 years that years ago took 12 weeks. That's the reality of the situation.
Yeah, it's a rock and a hard place sort of situation, because the big house builders have the budgets to pay the planners what they want, whereas the local councils are going bust. So it's whether you pay them more to stay in those positions, but is their budget available if so many local councils are going bust?
Could the council tweak what it costs for a planning application? A couple of £100 more a planning application might give them the resource overall to employ another person.
Yeah.
Is that commercial view of, okay, can we squeeze a little bit more profit or revenue on what we're charging, but that will release enough funds to employ 3 more planning officers in our team, or allow us to outsource it. So yeah, I think there needs some creative thinking in there, and some very business savvy people to come in and look at it commercially.
Yeah, definitely. Alex has put an interesting comment in the chat. He said that the system needs to be streamlined to speed up the process. I totally agree, Alex. I think there is a hope, and a rising hope, that AI is going to help bring in some sort of technology that will allow these planning applications to be processed a lot quicker. But then the technology is going to be quite expensive. So it's when the technology gets cheap enough, can they implement it?
Yeah. And he's right, the system needs streamlining because it's too rigorous. There's too many stipulations. You can't do. We've got a client at the moment that's battling with the planners because the roof tile is slightly off color when the planning officer has come out, and it's just, it's actually the same color as either neighbours that are 100 years old properties. But they don't like what roof tiles got on there. So there's a battle at the moment to try and remove those. But yeah, it needs to be streamlined, less rigorous kind of planning restrictions to enable this stuff to go through. Else we've got no chance of building 1.5 million homes.
100%. And I'm a big champion for this. Is they need to be working a lot closer with the SME developers, because those guys are going to fill the gaps on the properties that we need.
And help them with brownfield sites and greyfield land that they're talking about. It's all right saying, oh, we've opened all this brownfield up, but quite often that can be more expensive to develop because of contamination and loads more kind of restriction to go through. So whilst it's there and it should be developed, it's not cost effective. So what can the government do to assist with that? Whether it's grants, whether it's helping them with the planning system so they can save some time and cash in that process. But yeah, I think they've got to open up some of those markets pretty quickly.
Yeah, I mean, we're both in the West Midlands. We know the story. There's disused factories, beautiful Victorian buildings all around us, but the amount of radon, the amount of existing tanneries that were there with all the chemicals that were used is just, it's not viable to build. And then that's not even getting into the Japanese knotweed and asbestos situation, which is always good fun. But Andy, in terms of Centrick, we touched on it at the start. You're a huge organization. You're dealing in multiple countries, and you've just set up an office in the Far East and bringing foreign investment into the UK. Is that something that you're seeing a rise in, even now that we're still seeing a rise post Brexit, post election, still a rise in foreign investment coming into the country? And do you see that continuing to rise next year?
Yes, I do. I think our sweet spot in our business model is the British expat abroad. So we've got good relationships and links with wealth managers, family offices, brokers. And a lot of ours are British passport holders that are working in Asia or Africa or somewhere. And, they're earning good money. They're paying less tax than they do in the UK. So they've got disposable income on an annual basis. And I think rather than leave the money in the country that they probably don't in the long term see themselves being there forever, or they don't want to leave their money in Hong Kong, stroke China or Asia. There's a demand to invest back into the UK where they hold a passport, they trust the legal system, they trust the long-term housing market in the UK, because obviously over the last 100 years it's been one of the best investment strategies out there. So for us, we're seeing people with an appetite where they might have 30, 40, 50,000 pounds. Some of these people are teachers, insurance brokers, IT consultants out there. They're not millionaires, they're working professionals, but have managed to save a deposit, and they see UK investment as a safe, hands-off approach. Doesn't take a lot of their time. They give it to a managing agent once it's complete, and they're seeing it as a long-term investment, 10, 15 years. We say to all of our clients, look, property isn't get rich quick anymore. It's not crypto. We're not trying to say it is, and we're not trying to sell it as that. But if you've got a 10, 15-year plan to build wealth and to build positive cash flow, then property is still one of the best investment strategies. So again, we provide all of the information and all the track record and the location stats and why that particular development is a good investment opportunity. But yes, for all of those reasons mentioned above, we see investment from foreign countries being a big part of it. The flip to that is, at the moment, we talked about developers not being able to develop for the cost that they can sell it for. So for some of these city centre apartment blocks to be viable and to get out of the ground, we need to take those developments offshore, because the local market doesn't have the appetite or affordability that the developer needs. So as an example, if a client came to me and said, I'm building 60 apartments in the middle of Birmingham city centre, my advice to that person would be to take a good percentage of that offshore off plan, because the local market is slower, because they can't pay 350,000 for a 2-bed and 250,000 for a 1-bed. What used to be the market of, Birmingham's got one of the youngest populations in Europe, I think it is, with under 30s, and a lot of these are graduates or first time kind of career movers, and whilst when prices were lower, they were in the market, but I feel like they've been priced out now. But the developer couldn't bring those prices back to deliver for the local market, because it's not viable as a scheme then in terms of building it and selling it. So it's a bit chicken and egg, sort of. We don't want all the investment to be offshore, but then equally, nothing would be getting built in the city right now if it wasn't for that market continuing to have appetite for it. So yes, I do still see it as to answer the question. Yes, I do still see it as a big mover in the property market over the next few years.
Amazing. Guys, just to say, if you have got any questions for Andy, do please put them in the chat. Or if you're not comfortable putting them in the chat, I've just put the link for UK Homes Network, so you can reach out to Andy via the platform, or anyone at the team at Centrick via UK Homes Network. So it would be great to have you in there and sharing your questions and discussion topics on today's session. So please do make sure you do that. Yeah, so Andy, obviously you're covering multiple countries. You are bringing that investment into the UK, but you guys have quite a, and this is probably the wrong word to use, but quite a patriotic outlook on it, in terms of the way that you deal with your UK based investors. As you say, look, we will look to service you first in terms of the investment deals, and then probably not wording it right, but you then sort of look at sort of foreign investment if the demand is not there within the UK.
Yeah, so we've recently set up the Investor Club, which is exactly for that. So I think you were at the launch a few months ago, Chris, and my comments were, I can't sound frustrated because it's a big part of our business, what we do offshore, but I do feel that the UK investor is missing out seeing these opportunities. And what we said to people, look, if you're registered on our Investor Club list, what we will do is we will release these developments to you first. So you'll get best pick, whether you've got a desire to have a one bed that's south facing, or in a particular development, if it's got good views, or you're adamant you want a top floor or a ground floor one. You get the pick of the bunch first. As we know, also, people tend to pick the best yielding units first. So there's a sweet spot usually in price point where you get the best income versus the best outlay. So what we're saying to our investor club members is, look, we will release these developments to you first. A lot of our stuff is off market anyway. You won't find it on Rightmove or Zoopla or anywhere else. So you've always got to come through us to see it. And we then bring a power team together. So we appreciate that not every investor is seasoned and will have their own lawyer and their own finance broker or mortgage broker and furniture provider and managing agent. So we've tried to bring all of those key personnel together. So we've got a mortgage broker on board, we've got a solicitor on board, we've got a managing agent on board, right the way through to actually furniture providers, and all of them have offered to give varying levels of discount on their services for our members. So not only are you getting first refusal on these developments if you're a part of our investor club, but you're also getting a team of experts that we've worked with for many years, at rates again you couldn't find if even you went to them direct. So there's multiple benefits to being part of the investor network that we've set up. And like you said, Chris, people can go on to your app and find all the details on there and register their info on there. So love to see some of you there, if you have 5 minutes to register.
Yeah, and Helen and Laura in the marketing team, they are kicking out a serious amount of content at the moment. So if you've enjoyed this webinar, Centrick are doing regular events, they're doing regular webinars, all like this session with a panel of experts around the investment market. So definitely check those out. You can see Centrick post that on UK Homes Network and go through their profile. Paul's asked an interesting question. Have you got any experience or advice on biodiversity net gains?
Advice is very difficult at the moment. I think it's very new. Again, talking with an architect yesterday about the challenges that it's throwing in into the mix. I was sat with a developer earlier this week, and I think his fees that he was running up and credits that he'd need to buy were running into the realms of about 400,000 on a development scheme, and it wasn't a very big scheme. I think I'm not an expert in it. I'm not going to claim to be, but we do know some very good people. So if Paul, if you've got a particular site or a particular example that you're working on, I'd be happy to introduce you to a few key people. But I think it's quite a broad question, advice on it, but it's such a minefield. And again, talking yesterday, even developments that were industrial units, as an example, that have been flattened years ago, even if that's been left as just rubble, two things. So if it started to grow green over time through shrubbery, that's an issue. You're going to be hit with biodiversity net gain. And also it goes right the way through to, if there's things like insects living in there as well, there might not be any greenery, but under the ground, there could be insects that have made their way through all the rubble. So people think, oh, it's an ex-commercial unit. It was flattened 10 years ago. It's not going to have any biodiversity net gain issues. You can get caught out on that. So I'd say, as part of any developer, if they're appraising a site, you need to take a biodiversity incredibly seriously in your appraisal, and make sure you don't get caught out by it after completion or exchange contracts.
Yeah, I definitely think it's here to stay, but in the sort of short term to long term, there are a lot of mounting pressures to have a look at it again and try and clarify some of the teething issues that it's had, because it is so complex. And established property professionals like yourself, Andy, and other people that have been in the game for a long time are still sort of trying to navigate their way around it, because it is so complex. So
yeah. I mean, I went to a seminar a few months ago that one of the biggest lawyers in the UK put on, and they had their expert, and even she couldn't. It's not one silver bullet. There are so many caveats and even the credits that you can buy. Obviously that's the get out of jail card almost. Just buy a credit. So the government don't really want you to do that. It's the last resort. So, and then do you have to buy credits in your local community, or can you buy a credit up north or down south? So yeah, it is a minefield, and yeah, I would say expert advice is key, unfortunately.
Definitely. Well, Andy, I felt a lot much better looking back on 2024 after speaking to you. Maybe it's not as doom and gloom as I was sort of as I was looking back on it, but
Yeah.
you've obviously shown that there's always going to be challenges and opportunities with those challenges. What are you most looking forward to next year?
I think stability. I think 2024 has been an unstable year with government ultimately and rates. So I think people feel more comfortable to invest, whether it's investing in a buy-to-let or investing in a development, when the country's in a period of stability. So I see that as one of the biggest things that will just give people confidence. And if rates are calming and everything just feels a bit normalized, you can plan for that.
Yeah.
You can't plan for what happens if this government comes in or this policy comes in. So I think, look, next year is going to be an interesting year. I think we'll see a lot of people coming back to the market for development activity. A lot of my clients are saying they're ready to purchase again next year. Their appetite's there. They've got cash ready to deploy. So yeah, I'm excited. I'm looking forward to a good year in kind of land and new homes. And then obviously in terms of our investment business as well, I think people are going to start to come back to property investments, because there's a lot of signs that some of the stocks and shares and the S&P 500 and whatnot. There's some reports from some of the big players in that market that they might not be predicted to perform as well as they thought. So yeah, I think property is always going to be a viable investment. It just hasn't probably been flavour of the month for the last 12, 18 months. But yeah, I think property is here to stay. It's always been an asset class and always will be. So yeah, I'm still looking forward, which is the main thing, and not looking to diversify into anything else.
Great stuff. Well, I hope that positivity has rubbed off on some of our audience members. If you guys want to watch the recording back or share this recording with anyone that you work with or customers, you can find the recording in UK Homes Network this afternoon. So please do feel free to share that. Andy, if people want to find out a little bit more about Centrick, they want to find out a little bit more about yourself, reach out to you regarding some of their developments or their investments, how do they speak to you?
Yeah, I'm on LinkedIn. Obviously, if you search me on LinkedIn, I'm quite active on there. Our website is centrickinvest.com, and you can get in touch with us there. Or obviously go through the UK Homes Network, right? I think all of our stuff's in there. So yeah, more than happy to speak to anyone. Yeah, Instagram, LinkedIn, and our website is three useful places.
Great stuff. I've just shared the link for Centric Invest in the chat. So if you guys want to click that, and you can go over to their website and see some of the developments that they're working on at the moment. Yeah, it would be great for you guys to check that out. So this concludes our final webinar of the year. It's been emotional. Thank you to everyone that's joined us on this journey over the last 11 months that has been when we've only had 2 or 3 people on the call, right up to we had 50 people registered for today. So thank you so much for sharing this journey with us over the last 11 months. We're really excited to share with you all the stuff we've got planned for 2025. Our first webinar is going to be on the 17th of January with Hayley Andrews. Hayley is a massive developer in the West Midlands. She's also the star of Property Elevator on Sky TV. She is on a one-woman mission at the moment to redevelop most of Dudley. She's done the fire station, and she's also currently doing a mixed-use commercial development in the old museum right in the city centre. So she's going to be sharing her journey and some of the developments that she's done in January. So I hope you can join us all for that. We're, of course, partnering up with lots of networking events, including Centric Invest Club, where you'll be able to go along to
Can I
their.
just say we've got to develop an investor club seminar Saturday the 18th. So it's a Saturday morning, 10 till 12. Anybody interested in property investment, come along. We've got a great mortgage advisor there, Hitton from Visionary Finance, and we're going to be teaching you all the tricks in the trade, getting your investment portfolio underway. So we'll put that link, if it's not already, I think it's in there, Chris, but it's in the app for Saturday the 18th. So sorry, a bit of a selfish plug.
No, go for it. Yeah, no, that's great. I think the team shared it this morning. So if you go to the UK Homes Network, you'll be able to check that out. Take it from me, Andy's sick of me telling him this, but they have one of the most stunning offices in Birmingham for the style of architecture and how they've redecorated it inside. Plus, they do incredible catering when you go to their investor club. So
it's got to be a good reason to turn it, right, Chris?
Yeah, I mean, I'm going out with doggy bags left, right, and centre. Everyone thinks I'm a bit of a weirdo, but it is a fantastic event, and some of the best property professionals in Birmingham attend these events. So please do check that out if you can. So yeah, guys, we'll be back in the new year with lots of new webinars and lots of new updates. Thank you so much, Andy, for joining us. I know it's taken a little time to get this booked in because you're such a busy man, but I really do appreciate you taking the time to share that with our audience.
Been wanting to get on for a while, so yeah, thanks for having me, and yeah, let's get one scheduled for the new year.
Definitely. All right, guys, have a lovely Christmas, and I will see you all in the new year.
Thanks all. Cheers, Chris.
Take care. Bye bye.